If you're only looking at your profit and loss report, you're missing half of the picture. If you run a contracting business and you only ever look at your P&L, you're essentially flying blind. The balance sheet is the report that shows you whether your business is healthy or not. It tells you what you own in assets, and it tells you what you owe in liabilities. Every balance sheet has 3 sections to it. The first section is assets. This is everything that your company owns. Then you have liabilities, which is everything that your company owes. And then down here you have equity, which is everything that's left over. One good thing to remember is that your total assets equal your liabilities plus your equity. Your liabilities plus your equity will make this second half of the balance sheet equal what's in this first half of the balance sheet, and therefore balance. That's why accountants gave it the clever name of a balance sheet. Okay, let's start with assets. So assets are always going to be broken down into current assets and fixed assets. A good rule of thumb is that current assets are anything that you could turn into cash within a year. Fixed assets are going to be your bigger, long-term stuff, like equipment, computers, printers, anything like that. So looking at the sample company that I created, it's called Lone Star Plumbing and Drain Co. We first have bank accounts. Now, this particular company has an operating checking account at Frost Bank and a reserve savings account at Frost Bank. So this is essentially cash, or it could be turned into cash, so therefore it's a current asset. Next, we have accounts receivable. So accounts receivable is essentially just going to be money that clients owe you. So it's income that you haven't been paid out yet, but you've done the work for, essentially. In other current assets, we have inventory, which is pretty self-explanatory. And then we have undeposited funds. So undeposited funds is really exactly what it sounds like. It's essentially deposits in transit. So deposits that you have made but have not cleared the bank yet. Then we get down into the fixed asset section. So for our plumbing company, we have $13,495 worth of service trucks capitalized in here. So this means we either have a truck that's valued at $1,495 or we have a couple of them. But either way, the trucks total up to $13,495. One thing that's important to note is that fixed assets are always depreciated. So let's just say, for the sake of example, this is just one vehicle. The company doesn't get to take the $13,495 expense immediately. It has to capitalize this truck on their balance sheet, and then it has to depreciate that asset over time. So in this specific scenario, depreciation has not yet been taken. Therefore, the value of the truck is still the full amount that we paid for. Let's say depreciation was taken. There would be another account underneath here called accumulated depreciation, which would be a negative number. And if we had $1,000 depreciated on this asset, it would say minus $1,000 below here, and then your total for service trucks would say $12,495. Then we have the liability section. So in this example, we have accounts payable underneath current liabilities. Accounts payable is money that we owe to some of our vendors that we have not paid out yet. Then below that, we have credit cards. So this company has one MasterCard with a balance of $157.72 as of April 26, 2026. And then below that, we have the other current liabilities. So we have the Department of Revenue payable that has a balance of 0. Then we have the Board of Equalization payable, which has a small balance. And then we have a loan payable. In the next section, we have long-term liabilities. And you can see there's an account underneath it called Notes Payable with a balance of $25,000. So the difference between long-term liabilities and current liabilities are that current liabilities are expected to be paid off in less than a year. So like credit cards, you're not going to carry that balance for over a year theoretically. And same thing with AP. You're not going to not pay your vendors for a whole year. Notes payable, however, though, is a little bit different. A lot of different things could be in this account and make up this balance. So you want to have one account per loan. But this one has a $25,000 balance. So in the context of a plumbing company, it's safe to assume that this $25,000 owed is probably some kind of equipment loan. If you had a vehicle loan, it would also be under this long-term liability section. Then we have our equity section. As a business owner, this number right here is the one you're going to want to pay most attention to, retained earnings. So retained earnings is also exactly what it sounds like. It shows you over time how much money that your business has retained. Here we have an owner's equity account, which looks like it's being used as a draws account. And I say that because liabilities have a credit balance. So all of these numbers that are positive are credit balances. And then assets have a debit balance, so all these numbers are debit balances. But if there's a negative in either section, then it becomes the reverse. So we know that owner's equity has a debit balance of 9337.5. So all this is really telling us is that This year, the owner of this business has taken out $9,337.50 from their business. I see a lot of business owners making the mistake of worrying too much about their profit and loss. Not to say that that's not something you should worry about, because you absolutely should, but you need to make sure that you're also looking at your balance sheet. A balance sheet is a snapshot of where your company is at a specific point in time. This is also why it's important to make sure your books are up to date so that you can pull a balance sheet at any time and know exactly where you lie. If you need help with your bookkeeping in QuickBooks Online, check out shorelineops.com, shorelineops.com, and book a free call today. We are QuickBooks certified pro advisors and have been since 2025, and we are QuickBooks Online experts. At Shoreline Business Services, we allow business owners to worry about running their business while we worry about all the financial stuff. Thanks everybody for watching. We'll see you in the next one.